Deathly afraid of scalping? Well, in most cases, you probably should be. While the idea of scalping has its appeal, the hard fact of the matter is that most scalping techniques break down and fail. Why is that? We've seen unbelievable claims of scalping profits and being able to quickly take high percentage bites out of the market. Systems that claim to win 90+% of the time. Easy trades that get you in and out of the markets fast. Who wouldn't want that? In most cases, in order to get a 90% winning percentage, one has to take on larger amounts of risk per trade. The idea of just jumping onto the perfect trade setup, trade after trade, and scalping out 5 or 10 ticks or pips of profit 90% of the time, well, it can be done. But, as Paul Harvey would always say, and now the rest of the story, for there is actually a rest of the story. And it usually doesn't have a happy ending. Do you think you can easily put on a trade and scalp out 5 ticks, for example, or 5 pips on your favorite Forex pair? You see, herein lies the problem that many of these claims fail to convey. 90% winners is not 100% winners. And I hate to break the bad news to you, because this is what causes most traders to fail by one way or another. But 100% winners doesn't really exist in trading. Let's just get over that and move on already. 90% is pretty good though. It's not very realistic, but let's just pretend for a moment that it is. What about when the 10% losers come about? They can come at any time, right? Worse, they could cluster up, and one loss can turn into 2, 3, 10. 10, really? Sure, why not? I'm just trying to give you the truth here. Think of it like this. If you flip a coin over and over again, you know, it should be 50-50. Heads, tails, but it doesn't work like that in the real world. You could actually get a winning streak. You could hit 10 heads in a row. You could hit 20, even more. And that could happen at any given time, right? I mean, ultimately it's going to level out if you flip it enough times. Well, what about with trading? The 10% losses can occur at any time too, even with a method that wins 90% of the time. And if that doesn't scare you, think it through a bit further. Where would you place your stop in order to get 90% winners? Do you honestly think that you can place your stop 5 ticks away from your entry if you're going for a 5-tick scalp profit and still achieve 90% winners? Can you put it 7 pips away? 10? Good luck. I mean, let me know how that works out for you. I once was one of those traders that thought I had a great scalping method. I did, actually, until I didn't. I won 28 trades in a row once. A 28 trade winning streak is pretty darn good, don't you think? And then I took a loss. All good things come to an end at some point. No big deal, until I took another loss, and then another, and then another. My stops had to be quite a bit further away from my entries in order to give the trade room to develop, and that in part is what led to my big 28 trade winning streak. But losses tend to cluster up, and after 3 weeks of building up a nice profit, I ended up giving it all back in just a few trades. 10% losses do come, and they come with a vengeance. 3 weeks of solid gains up in smoke in just a few trades. And I'll tell you something, that is very disheartening to say the least. And I was trading the Russell at that time. But there's so much more to it, especially for my Forex friends out there. The allure of scalping out a few pips here and a few pips there is very appealing. But what most traders rudely find out is that the odds are stacked way against your ever succeeding at this for very long. Brokers are not your friend. They prey upon you. In fact, they want your money, and they have many tricks at their disposal to get your money. They can widen the spread anytime they want, not only to tick you into a bad trade at the moment before it heads the other way, but they can tick you out of a trade the moment it actually heads towards your target. And they do this all the time. This won't even show up on your charts. Scalp trades are just too close, and the brokers have a free license to pick off your trades anytime they want. And believe me, they do. You've heard the saying that a fool and his money are often separated? Well, what about if you don't know who the fool is at the poker table? It's probably you. Do you really think the broker is the fool? Who do you think is on the other side of your scalp trade? Think about it. I can certainly see why people would want to scalp. Let's face it, If you had a method that could win most of the time, and you can get in and out within 10 seconds to 10 minutes per trade on average, who wouldn't want to do that? To me, that's trader nirvana. I can imagine new friends and acquaintances asking me what I do for a living. Oh, I work 10 seconds to 10 minutes per day. Silence. I would love to see the looks in their faces. Those that have to go to work, fight the commute, and pretty much be a servant in helping build fortunes for someone else. That's what a job is, right? So who wouldn't be seduced by the idea of a trade that can be built up to enough positions to lock down a handsome income with just 10 seconds to 10 minutes per day? Scalping has its appeal for sure, not to mention the high-octane adrenaline rush one feels when witnessing their own live trade get in and then zoom to a quick profit. In, out, done. See you tomorrow. What a way to make a living, right? Who wouldn't want that? I'd want that. Wouldn't you want that? Oh, honey, I'm not going to work today. In fact, I'm not going to work, period. Ever. I just fired my boss. Pack your bags, we're going to Italy. I mean, after all, if I can trade 10 seconds to 10 minutes per day and that's it, why do I need to stay here? I can do that from anywhere. Daly City is awfully foggy, right? And boring. My laptop is portable. They have high-speed internet in Tuscany, Provence, Thailand, Argentina, Hawaii, St. Thomas. Have laptop, can travel. 10 seconds to 10 minutes. Trader nirvana. I mean, that's why we want to trade, isn't it? For absolute freedom. The problem is, I have yet to find a credible way to achieve the high-octane action and fast profit-making potential of scalping without the crazy risk of the crushing 10% losses that can come and will come at any time. Until the PTU trend jumper trade strategy. I know this sounds like a crazy claim, and I would hope that you would remain skeptical as you should with any claim like this. But let me now show you why the PTU trend jumper actually offers a way to scalp the markets, achieve impressive winning results, while also keeping your risk manageable. Here's a great example of the trend jumper. Check out this trade on the Dow E-mini. This just happened the other day. This kind of trade happens all the time, over and over again, on many different markets, futures and Forex. Train your eyes on the trade that's setting up on the very right edge of the chart. Right here. Look how easy it is to see this trade. The plus sign is your entry. As long as you're above the green dotted line, we're going long. Look at the trades that happened prior. They were below the green dotted line. They're all going short. The dots above, those are our targets. We're going to go to the fat target, the middle one, right there. And the dot below, that's your stop. And all you have to do is click on the bar and you can see the entire trade in the data window laid out in a very easy to read format. It's in the order of the dots. Here's your stop, your entry, and your targets. Each trade dynamically adjusts to current market conditions. So looking at the trade on the very left, you can see that that's a lot smaller. The trend jumper even allows you to build a bigger position by identifying additional setups as the trade continues in the direction of your original trade. Those are optional. But notice the scalp. Gets in at 519, gets out at 509. There's your 10 tick scalp right there. The trade triggered in at 7:30, hit the target at 7:32. And that's Central Standard Time. That's an hour before the U.S. equity markets even opened. In this trade, we actually took this in our live trade room. Because it's adjusting to market conditions, this scalp trade is going to be quite a bit larger. We're going from 501 to 523. That's a 22-point move. Look what happened. Took a while before it started to go. But our stop is down here, and it's perfectly placed. And we're not putting on crazy risk either. If this is our entry and this is our target, our stop is here. We're risking this much in order to make this much. It's more than 1 to 1 in most cases. Sometimes it's 1.5 to 1, even 2 to 1. But there's more to it than just this. Sure, you could scalp out profits on a regular basis. It's like hitting single base hits in a baseball game. If you hit enough of them, you're going to score a lot of runs. But every now and then, What's wrong with a double or a triple, or hitting a home run, or even a grand slam? The way the trend jumper is designed, every trade gives you the chance to stay in for larger moves because we trade it with multiple positions. The first position comes off right here at this target, and the second position is going to get to risk-free. In other words, as the trade progresses as this one does, the stop jumps up automatically here, and all of a sudden you now have a risk-free trade. And then it pops up through the full target, but you keep part of your position on, and it continues to trail and trail higher, sometimes higher, and you get a much larger profit with the other half of your position. This entire trade, which really started out as a scalp trade, it netted over 50 points just by following this very simple and easy to follow strategy. And we do this all the time. Here's the trade again where you could see the whole thing. And notice that it happened really fast. It actually set up here, but because of our rules, we didn't get into it until here at around 8:33. Well, by 8:53, it triggered out with a 55-point profit. Okay, that was more than 10 minutes. It was 20 minutes. But it was a heck of a lot more than 5 or 10 ticks also. How about these crude oil trades? This is another great market to scalp out profits. But we want to combine it with the ability to capture bigger moves as well. Check out this one. It happened late in the session just the other day. The entry was to go short at 92.54. We're trying to get to 92.46. The fat target. That's a pretty good scalp. At $10 a tick, that trade's good for $80 per position. It triggered in at 14:17 Eastern Standard Time. It hit the target at 14:19. That one took only 2 minutes. But look how the trailer kept you in even longer. And if that wasn't enough, you could have caught the trades going up as well. Here and here. This was Friday afternoon. What a way to finish your week of trading. And notice how the trailer got you quite a bit more than the actual scalp target. Also notice the amount of risk you had on the trade. You risked from here to here. You scalped out about the same amount down to here, but your risk reward is greatly improved when you consider where your trailer comes off. Quite often this is going to happen, and sometimes you'll catch monster moves. You're risking this little bit to make this large amount right here. That's the way you win at scalping. Now, of course, scalping Forex poses all those problems that I brought up. Okay, you can't get away from the broker trying to take you out of the trade. That's going to happen. So we have to come up with different ways to use the trend jumper. I like to use a slower day trade chart, like the 15-minute chart, where the trade is far enough and large enough to keep you away from the broker taking you out based on widening spreads or just trying to hunt your stops. Here's a trade that actually was the last trade of the week, and you can see the plus sign is your entry. We're going to any one of these targets. Really, with Forex, you could scale out at all the targets, and then you could also trail one of these dotted lines. In this case, the blue one. It's the same principle, you just slow it down a little. Hey, if you want the in and out in 5 or 10 minutes or whatever, you trade futures. If you're a little more patient, you could trade Forex. I personally like to trade end-of-day Forex charts. Same principle applies, same really nice risk-reward ratio, and you utilize the strength of the Forex market where you could actually scale out percentages of your position at various target levels. But even though it looks a little bit different, this is classic trend jumper trading. You've got your small risk between your entry and your stop, the much larger targets, and of course the much larger target, and the ability to trail on up. This trade is still going with the final part of its position. It hasn't stopped out yet. Check out the profit on this trade. 50 pips to the first target, 70 pips to the second, 198 pips to the third, and as you can see, the market's moving now. The remaining of the position is still going. Who knows when this will stop out? And it doesn't matter. It's a very profitable position regardless of the outcome. I'm showing you this on an MT4 chart. Here's a trade station example. Check out the pound US. This is on an end of day chart. This is the same principle. I mean, scalping is just a word, right? One person's scalp is another person's swing trade. There are hundreds of pips on this chart, and it's the same thing. Look at the risk reward. The entry was here, the stop is here. You've got all these big targets that you could take profit on, and you got the trailer coming all the way down. Here's a short. You can take a profit at the first target. You're going to move your stop and cut your risk off of the rest of the trade. We're currently in a long trade. Look at how the stop was perfectly placed. This one's already come up and hit its first target objective, and it's still going. No matter what the outcome is on this trade, it's still going to end up successful. This is the PTU trend jumper. How about this recent wheat futures trade? The agricultures are excellent scalping markets. We start at 9:30 Central. This trade triggered in less than 1 minute after the start time, and it spiked up and hit the target literally 20 seconds later. And we were done with that trade. That trade went from 680.5 to 682 at $50 a penny. That was $75 per position. How about the Russell E-mini? This is the time of year we want to start paying attention to the Russell right around the middle of April. This is when the Russell traditionally heats up and becomes a hot trading market, and we've already seen it begin. Check out this early trade the other day. You can see the perfect scalp. This one got in at 9:32, hit its full target at 9:34, 2 minutes later. But better yet, we were able to stay in the position and trail it all the way down to here. That trade was good for 3 to 4 Russell points at $100 a point. I hope you enjoyed this video on the dangers of scalping, but I also hope that you're excited about the solution, the PTU Trend Jumper. This is TJ with PTUTrendJumper.com and NetPicks.com. Thanks for your time, everybody. Hope to see you again soon.